right now we will be talking about financial reports or financial statements important for IGCSE Business 9-1 exam. As you know, there are three main reports: the cash flow forecast, with such elements as cash inflow, cash outflow, net cash flow, opening balance, closing balance. Then P&L, or profit and loss account, which is also known as statement of comprehensive income, with such elements as sales revenue, gross profit, net profit, and some other elements. We will be talking about them in a second. And last but not least, the balance sheet, or a statement of financial position, with such elements as assets, capital, and liabilities. Let's talk about statement of comprehensive income, which is also known as P&L, or profit and loss account, or income statement. Like too many names, it's very confusing. Sorry, it's not up to me. So, statement of comprehensive income is a financial document which shows firm's income and expenditure in a particular time period. You can also say that statement of comprehensive income shows different types of profit and different types of costs in a particular time period. Types of profit, like do we really have different types of profit? Yes, we do. Let's talk about different types of profit first, and then we can focus on statement of comprehensive income per se. So first of all, we have sales revenue or turnover or sales turnover. Like once again, too many names. Our sales revenue or sales turnover is money generated from sales or money given by customers. This is not net profit yet. It's just money our customers paid to us for the product or for the service. Sales revenue less cost of sales, it's going to be gross profit. What is cost of sales? Under cost of sales, we understand money spent on raw material and on wages of labor directly involved in production. So, cost of sales can also be called production cost. So, gross profit is the first type of profit which we have to know is sales revenue less cost of sales. Under cost of sales, we understand money spent on raw material. Then we also have operating profit, which is gross profit less expenses. Wow, what's the difference between cost of sales and expenses? Cost of sales, it's money spent directly on production, like on raw material and wages of labor directly involved in production, like factory workers. And the expenses, we understand money spent on other things. For example, on rent or insurance or advertising, marketing, or salaries of administrative staff. All of these expenses, they are indirect costs. These expenses are not directly related to production, so they are not cost of sales. However, these expenses are also important for the business, and the business can't just get away without them. So operating profit is gross profit less expenses. As you can understand, operating profit is always bigger than gross profit. Then we also have net profit. What is net profit? Net profit is operating profit less tax, less interest. So tax, it's money we pay to the government, and interest is money we pay to the bank. So at least we have to know gross profit, operating profit, and net profit. These are different types of profit. Apart from these three, we also have distributed profit and retained profit. Like, what is distributed profit? From the net profit, we can pay dividends. Part of the profit, which was paid to shareholders as dividends, is called distributed profit. And part of the profit which was not paid to shareholders or which was not given to shareholders as dividends, but which was kept by the company to use in the future to reinvest into future growth of the company is called retained profit. So, as you can see, there are different types of profit: gross profit, operating profit, net profit, distributed profit, retained profit. And we need at least some of these types of profit for a statement of comprehensive income. Let's have a look at a simple statement of comprehensive income or profit and loss account. So we have figures for 2 years, like at least two, so that we could compare our performance over several years. We always start with revenue or sales revenue or sales turnover. It's the same. Like money generated from sales, which is also calculated as PQ. P stands for price per one unit. Q stands for quantity sold. So revenue, it's money from selling goods or services, or it's PQ. So revenue for 2016 is 5,400. That's it. Then revenue less cost of sales is going to be gross profit, like the first type of profit which we have to know. Cost of sales, what does it mean? Under cost of sales, we understand direct costs or production costs. Money spent directly on production of our goods or service. Usually it's raw material. If I produce dresses, my cost of sales is money which I spend on fabric. If I make pizza, my cost of sales is money which I spend on flour and some flavorings. If I produce furniture, my cost of sales would be plastic, wood, and what else? Nails, probably. Um, so, under cost of sales, we understand raw material and also wages of factory workers, wages of people directly involved in production. Under gross profit, we understand revenue less cost of sales. So, as you can see, for 2016, gross profit is 1,900, which is calculated as revenue 5,400 less cost of sales 3,500. So that is gross profit, type of profit which we have to know. Then we also have operating profit, which is calculated as gross profit less expenses. What kind of expenses? Well, in fact, there are different types of expenses. You may look at um, a plethora of P&Ls, and you will find different classification of expenses. What you have to know that expenses are indirect costs, like expenditure not directly related to production, but expenditure which is important for business in any way. For example, administrative expenses, like some general overheads like electricity, central heating, running water, office salaries, like you have to pay to the receptionist in any way, but like you keep in mind that a receptionist is not directly involved in the production of your pizza or in the production of like your furniture. Then stationery supplies like paper, pens, pencils, stickers, accountancy fees you have to pay to your accountants so that they could make P&L for you and cash flow forecast and balance sheet. Also, there could be some other operating expenses, some irregular ones, selling expenses and marketing expenses as well, like advertising expenses, distribution ones, promotional ones. And you do remember that altogether these expenses should be subtracted from gross profit so that we could get operating profit. Then our operating profit less finance cost is going to be net profit or profit for the year. Like so far, profit for the year before tax. What is finance cost? Under finance cost, we understand interest paid on loans. If before we have borrowed money from the bank, if it was vice versa, if somebody else borrowed money from us and now somebody else pays us interest, then it's not going to be cost, it's going to be income. And that's amazing. But usually it's cost because usually businesses do not lend money, but they borrow money from the bank. So profit for the year before tax is operating profit less finance cost or cost of finance or interest. Then we pay taxes on profit or like on corporate profit or profit of corporations. And profit for the year after tax is profit for the year before tax less tax. Surprise, surprise. So as you can see here, it's all crystal clear. We have different types of profit, which is in red, different types of spending or expenditure, which is in blue, and it makes it easy for us to compare different profits and different expenditure or different spending, different costs over several years. And we can see revenue here, gross profit, operating profit, profit for the year, and profit for the year after tax, or like profit for the year after taxation. Easy peasy, right? Piece of cake. Let's have a look at this exercise. So Format 66 produces software for automatic production lines. In 2015, its turnover, or like sales turnover, was 12.56 million. Its cost of sales, you remember that under cost of sales, we understand raw material, was 7.6 million, and expenses were 2.56 million. You remember that under expenses, we understand indirect costs like administrative expenses, marketing expenses, selling expenses. Okay, so number one, work out gross profit. What is the formula for gross profit? Gross profit is sales turnover less cost of sales. Sales turnover is 12.56 million, right? And cost of sales is 7.6. So gross profit is going to be 12.56 less 7.6 million, and it's going to be 4.96. That is gross profit. 1B, work out operating profit. As you remember, operating profit is gross profit less expenses. Gross profit was 4.96. We've just calculated it. And expenses are 2.56. So 4.96 million less 2.56 million, it's gonna be 2.4. Amazing. Number two, how much profit is retained? Okay, so our net profit is 2.4. So Format 66 distributes 0.8 million to shareholders. So distributed profit is 0.8 and the rest is retained profit. So net profit 2.4 less distributed profit 0.8. It's going to be retained profit 1.6. Like frankly speaking, I don't really like this exercise, but it comes from the book. We have to be able to do to do it. We have to know how to do it, but like they have totally ignored interest and tax. But okay, never mind. And the last question, question 3. What is likely to happen to the profit retained by the business? The profit retained by the business is likely to be reinvested back for its further expansion. Piece of cake, right? Activity 2. Sanchez Supersoft produces software for computer games. Okay, that's clear. It employs 230 staff and operates from Bermuda. Wow. The business has started to struggle a little owing to the slowdown in global economic growth. Happens to many businesses these days. Table 29.3, this table, shows the statement of comprehensive income for Sanchez Supersoft in 2016 and like 2015 as well, and some of the figures are missing. So number one, work out the missing figures. Cost of sales, this one, right? Profit for the year after tax in 2015, are this one, and operating profit for 2016. Okay, number one, let's do this. Cost of sales. We remember that gross profit is revenue less cost of sales. Gross profit for 2015 is 11.1, and revenue for 2015 is 29.2. So 11.1 is 29.2 less cost of sales. It means that cost of sales is going to be 29.2 less 11.1, and it's going to be 18.1. The next one, profit for the year after tax in 2015. This one, profit for the year after tax is profit for the year, which is 4.6 less taxation. 4.7 less taxation, 1.6. 4.7 less 1.6 is going to be 3.1. That is profit for the year after tax. Next one, operating profit for 2016. This one. So operating profit is calculated as profit for the year, which is 9.5 less expenses, 4.4. Okay, so 9.5 less 4.4 is gonna be 5.1. That's operating profit for 2016. Amazing, we've done it. Let's have a look at question 2. Comment on the performance of the business over the 2 years. So first we can see that profit for the year after taxation went down from 3.1 to 2.2, which is a bad sign. Why did it happen? Well, taxation went down as well. So taxes didn't go up. Interest didn't go up. Then profit for the year went down significantly. So it's not about taxes, it's about something else. Finance cost went up, but just a little bit, right? By about 20%. So there should be some other reasons for such a plummeting in the profit for the year after taxation. Let's go up. Expenses, they even went down. So it's not about expenses. Gross profit went down significantly from 11.1 to 9.5. Why did it happen? Well, actually, cost of sales, they went down as well, right? But so it's not about cost of sales, but revenue went down significantly from 29.2 to 26.9. So as you can see, the performance worsened. And the main reason for this is a decline in sales revenue. And this could happen because of fierce competition in the market. Or maybe this could happen because of low customer satisfaction, or worsening economic situation. And to boost profit for the year after taxation, Sanchez Supersoft should focus on sales revenue. Okay, that's it. It's done. So all in all, when it comes to statement of comprehensive income, you have to know that there are different types of profit, like gross profit, operating profit, net profit, and to be more specific, net profit or profit for the year before tax, net profit and profit for the year after tax. Also, we have distributed profit or dividends, retained profit, different types of profit. We also have to know that there are different types of costs or expenses. Cost of sales, which is raw material, expenses, administrative, marketing, selling, finance cost, which is interest you pay to the bank, and tax, money you pay to the government. Why do we need this statement of comprehensive income or P&L? For investment decisions, it's like I have two companies and I have only enough money to buy shares of one company. I look at their P&Ls and I decide in which company I should invest or shares of which company I should buy. So, P&L is often used for investment decisions. When it comes to managers or top managers, they use P&L for cost analysis because P&L or statement of comprehensive income allows you to analyze different types of costs and different types of expenses, and you can find your weak spot. For example, you can see that your gross profit is very small because your cost of sales are very high, and you try to find cheaper suppliers, and your profit for the year goes up. Or you can see that your cost of sales are okay, but your expenses are very high and your rent is very high. Okay, you try to find a place with cheaper rent and your expenses go down, your profit for the year go up. So cost analysis is like one of the main reasons why we need to make income a statement of comprehensive income. Or, sorry, statement of comprehensive income, definitely not income comprehensive statement. Then we can also use this statement of comprehensive income for future forecasts, like when we try to predict or forecast our future, like future cost of sales, future expenses, future gross profit, operating profit, and like net profit. And we can use statement of comprehensive income to make comparison, to compare our performance over several years, or to compare the performance of our company with performances of other companies. And at the end of the day, statement of comprehensive income will help us to reduce our costs and expenses and to boost our profit. Why do we need profit? For several reasons. Profit motivates. It motivates to set up a business. It motivates to run the business. Like we start our own business or set up our own business to make profit, right? And to become rich. Profit regulates the economy. If out of the blue oil industry is not profitable, but IT is, people will buy shares or like investors will buy shares like of IT companies. So um, investors will only buy shares or will only invest in the industries which show high profitability. So profit like performs regulatory function here, and as a result, like profit makes economy as a whole more efficient. Profit may also be used to measure business performance. If a business has huge profit, this business is successful. If a business has no profit at all, this business is not successful. And profit, to be more specific, retained profit, may be used as a source of investment because retained profit is kept by the company to reinvest further into its future growth and into expansion. So that's it when it comes to the basics of statement of comprehensive income. As for more thorough and detailed analysis, and as for like doing past papers, please watch the next video.